All right. Hello, good evening, and ladies and gentlemen. This is I'MPossible Terence coming live to you once again for Facebook Live, all right, on a Friday. Now, so thank you very much for joining me for Portfolio $2,000 cash flow. All right, we missed a week last week due to a schedule clash, and I'm back again with all of you in a blood red market. All right, so what is the market trying to do? Actually, simply put, the market broke a $3,900 point level. That is a very, very strong level in the markets, right? And now I would say this, right? I would say that the bears have control, which means we may actually see, right, certain sell-off continue to happen, right, before we catch a bounce, right? But okay, for those of you who are a little bit more technical, right now, I need to point to you that all is not that bad. Now, the reason why I say oh, it's not that bad is because, right, when I take you to the charts later, okay, my platform is still loading up, right? But when I take you to the charts later, all right, I want to show you something that tells me on the technicals, right, that there is a slightest chance, right, where the market, right, may actually see another round of a bounce. Yeah, okay. What caused me to have this kind of optimism over here? All right, I'll share with you when I go to the market updates. Okay. All right. Now, first, let me set it up. Yep. Okay. All right. Now, so without further ado, let's get the session started. All right. For those of you who are joining us for the first time, all right, you would see the banner on my screen, and the banner says, all right, if you're joining us for the first time, please go to this website, which is called streamyard.com/Facebook. Right. And when you get there, it'll be a pop-up page. All right. If you have not clicked on the blue Facebook button before, all right, please go ahead and do so. All right. Otherwise, this is how you see that. This is how you appear on my screen. All right, I won't be able to see who's leaving the comments, or I'll be able to see our Facebook users. All right, now, so for me to be able to communicate with you, all right, by profile or by name, all right, we will need you to go through to that link that you see on the banner once again, all right, and then hit the Facebook button so that it approves the system, all right, for us to see which profile is leaving comments. Right now, so before I start the session, if you have been joining us regularly, right, and you have liked the information that we provided during the sessions, right, please do hit the Facebook like button, right, to kind of help encourage me, right, to continue to do so together with all of you, right, and if you can as well, do hit the share button so that we can reach out to more people, yeah? All right, always great to have you here, Jimmy, all right, and always great to have you post those reminders in the comment section. It does help a lot, right? Why? Because right now, seeing your comment, Jimmy, means I can take mine off the screen. Thank you very much. Okay, now, so another quick one that I need to get through over here is this. All right, now, I need to put up a disclaimer, and the disclaimer goes, I will be discussing live trade suggestions, trades that I may be taking and placing in my own accounts. All right, but please be aware that all forms of trading bears a risk of loss. All right, so do your own due diligence. Right, know the risk involved with everything, right, before deciding if you want to follow any of these trades in your live accounts. Okay, now on the back ends over here, you do see my positions for September, right, and I've also updated some of them for the month of October. Right, I'll go through with them once I'm done with the market updates together with all of you. Okay, right now, so without further ado, let me bring you to the markets first. All right, and this is what I'm saying over here. As you can see today, right, clearly broke below the support level that we've drawn. Right now, this is the $3,900 level on the index, right, or points level, and today we have broken below that, right? But all that is left on the positive side is the fact that the RSI, which is a technical indicator, right, has not reached a new low, right? So what we have right now is that the prices, right, have started to hit a new low, right? As you can see over here, right, today is lower than the previous bottom, right, before the bounce came. Right, and yet the indicators are still on a higher level. Right now, so this sets up, this sets up for potential divergence on the indicators, right, and that may lead to some strength, right, or convince the algorithms, right, to follow through with the buy signals, right, if market does turn. Right now, so many of you may be wondering, Terence, how do I know if the markets will turn or not? Right now, if you can't see it on the daily chart, right, you must understand this. For a market to turn, right, it must always start from a shorter time frame, right? So what you can do is you can always go through a much shorter time frame, like a 4-hour chart over here, Right now, if we look at the 4-hour charts, all right, let me just move away from the pre-market pricing so that you're cleaner for all of you. All right, there we go. All right now, so if this is what you see over here, all right now, so you can see that the 4-hour charts, right, are still clearly down. All right, so the trend on the 4-hourly chart is still clearly down. Right, so you should not be betting on any bounce happening really, really soon. Right now, if you want to see it further, you can always go to the 2 hours as well, and you can see that the 2 hours, right, is still significantly pointing down. Yeah, okay. And if we go even shorter to a 1 hour, right, there's no signs, right, that it's still stabilizing yet. Right now, it looks like we're stabilizing over here. It looks like we are hitting the 30, the oversold level, all right, and now it's slowly moving sideways, all right, but okay, the bounce up, right, still hasn't come around, all right, or the picture hasn't formed yet, right, so that leaves to be seen, all right. So right now, right, you can see that the bearishness in the market still pretty much exists right now. So with all that said over here, if you have missed the chance, all right, once again, all right, I can't say this enough, right, you were given another chance to escape, right, any of your momentum stocks that you have bought the last time around, right, and then you say, I can't sell here, Terence, because my losses are too big, right? The market gave you a bounce, you should have gotten out, right, or scaled down on some of these positions, right? If you didn't, all right, that's how the market can, right, very quickly punish you, right? Why? Because we have not gotten out of the woods. You have to remember, all right, all the economic numbers will be skewed, right, towards bad news, right? And you don't know how the market is going to digest all these bad news, right? On a good day, they may brush it off and say, oh, that's just another bad news down the drain, right? But on a, different day, all right, just like what happened to the CPI number, right, it may strike fear into the hearts of the markets, right? And then it may cause a move like this and then carry on, right, much further lower. Right, so of course, right now, all eyes on Fed. All eyes on Fed because there's even a play that the Fed may raise or go up to a 1% raise in the next meeting that they have over here. That's how bad it is, right? And because of all this uncertainty, all right, it is shaking up the market right now, right? Remember, all right, markets love stability, right? And when you can't have stability, right, the first thing they're going to do is sell first and think later. Right, that's obviously what you're seeing right now. The market is in a mood to sell first and then think later. Right now, so with that, all right, we still have to monitor our positions, right? Because as a portfolio kind of investment philosophy, right, we can't stop trying to make money, right? Or we can't stop trying to make our money, right, work for us, right? So as all of you seen over here, I do have position up, right? So all I can really do right now is not regret about this, right? But it's all about managing it. Right, managing it and then moving forward. Right, so with that, all right, let's go to our positions right now, right, and let's see how we can manage these positions. Okay, right now, so I'm gonna just move this. All right, I'm gonna bring the screens up. All right, open up the yeah, I think this looks fine. All right, now, so let's go to our first positions over here. All right, we did have the WBA and Intel, right, which are basically stocks assigned, all right, at 45 and 42.50 levels. But of course, needless to say, as you can see, these two stocks, all right, are still bearing the brunt, all right, of the market downturn. All right, so right now, all right, they are really, really value-driven propositions, right? And you may start seeing articles out there that tell you that, hey, these may become what we call value traps, right? But the company is making money, right? You must understand this. The company is making money, right? It just needs a positive spark, right? Now, so this is where it's test of patience. Right, and sometimes, all right, okay, when you get your, judgment right, all right, you may just be too early. So in the case of these two companies, right, I have to admit, I'm pretty much early. Yeah, okay, I didn't catch the bounce and try to get out. Yeah, okay, all right, but we were early. That's fine, all right, because the fundamentals still stays, all right, that we pretty much should stay in these stocks. All right, look, WBA is still a 5 PE, all right, and it throws out a 5.6 dividend return. All right, so even on the dividend, I'm still getting paid on cash flow. All right, now how about Intel? Intel is also a 5% dividend return right now and trading at a 6 PE. All right, now, so if I don't have worries about the profitability behind these companies, all right, I'm really pretty much fine. Yeah, so I'm going to hold on to these two positions. So as you saw, I brought them from the September portfolio down to the October. Right now, next up over here is ANF. All right, so our next ANF trade expires today on the 16th of September, and it's an $18 put option. As all of you can see on the screen over here, right, ANF today is at 15.30. So that's obviously going to be in the money. All right, so I'm going to leave this position, right, and then let it expire, right, by market close today. Right, and when this option expires over here, all right, it will expire at $0 value. All right, why? Right, because the option expires and then converts into shares inside my accounts. Right, so it's going to be pretty much an assignment, right, on the market close today. Right, so on this option trade over here, right, it is a winner. Right, so we're going to pocket the $300 in cash flow. Right, so we're going to recognize that for the month of September because there's the option itself. Right, but what's left next is that you would see that for October, right, I would now spot a ANF stock position, right, for 500 shares because I traded 5 options. Right, so I've already written them down, ANF 500 shares at $18 a piece. Right, and what you also see is that my investment requirement right now is spotted at a full 100%. Right, fully paid up for the shares. All right, and this position right now is going to cost me $9,000. Okay, $9,000 right now. So that's accounted for. All right, and the options requirements are taken off. All right, now next up over here is AT&T. All right, this position also expires tonight. All right, 16th of September. All right, we collected 41 cents and it's an $18 strike. All right, so moving up over here, AT&T is at 16.59. All right, so let's take a look. Now, I'm going to wait. If I close this today, all right, I will have to pay about $1.40. All right, $1.40. So I'm going to bring down. Yeah, let's do that. Let's do that. All right, so instead of taking up this AT&T shares over here, all right, what I'm going to go ahead and do is to pay, right, $1.40 or $1.41, right, to get this position closed. All right, okay, now I'll explain to you in the reason behind this, right, once I've gotten it done, okay? Right, so first, what I'm going to do is I'm going to buy back these 5 options, right, that I've sold. Okay, I'm going to try it for one, let's see, 140, let's do it, 141. All right, it's done. All right, I've gotten it filled over here at 141. All right, so let me just pull over the window and show it to you. All right, so AT&T over here, all right, September 16, $18 puts. I bought 5 of them, right, at 141. All right, now, so that's done, and that's out of the window over here. All right, so let's go ahead and record it down. All right, 1.41. All right, now, so that means that I'm going to lose $500 in cash flow. All right, so that's going to bring down my cash flow target this month, right, back down to 1,291. So we have a little bit of a shortfall over here. Now, I explain to you why I want to do this later on, okay? All right, now, so with that, yes, this is probably one of our losing positions over here. All right, a blotter, all right, probably one of the first that we're taking. All right, now, and the reason why I want to do this right now is because, all right, I actually want to turn around. Okay, I want to turn around and I want to create cash flow for next month. All right, why? Because I'm going to just reopen the position. All right, now I'm going to go back to the market right now. Okay, and I'm actually going to sell, right, the $18 put option. All right, I'm going to sell the $18 put option, right, but for 1 month later, which is October. Yeah, okay, so that's what I'm going to do over here. All right, and hang on, okay? All right, now this is actually not going to be a losing position. I'll show you in a while. All right, now let me explain what I'm doing over here. Right now, so I'm going to close this and pay 141 for it, and then I'm going to turn around, right, and sell the 21st October $18 put option. Let's try to get it down for 173. All right, I got it done at 174. All right, so just to verify it over here, right? T October 21st, all right, $18 put. I sold 5 of them for a price of 174. Right now, so let me show you how I'm going to do the recording right now. Right now, so essentially, all right, I could have recorded it. I paid $0 to close. Right, I paid $0 to close this for the month of September. Okay, all right. Now, and what happens over here is this. All right, I'm only going to record, right, my collection, right, for 21st of October, $18 puts over here, right, done on 16th of September, right, and I sold this for 174, right, 174, 141. So that's 33 cents. Did I get it right, everybody? Just leave a comment and let me know if I did it right. Right, 174 less. Let me just get a calculator out. 1.74 minus 1.41. Yes, 33 cents. All right, 33 cents. All right, now, so I got that right. All right, and that's how I recognize the cash flow. Right, so rather than offset it, all right, and record a big fat amount for October itself, no, I don't do that. All right, what I do is I just record the difference, all right, of what I paid and what I collected by reopening the trade. So I collected a net of 33 cents. So that creates $165 in cash flow for my accounts for the month of October. Yeah, okay. But it also does close up, right, my trade 27, which is AT&T. All right, now, so we do have a Verizon assignment as well, right, and that continues to hold as a stock itself. Yeah, all right, now, next up over here is KSS. All right, now, so we have a KSS position. All right, Anthony, thank you very much. EL, all right, now, so yes, all right, now, there are certain trades that is worthwhile to do this, right, but there are certain trades that are much better off, right, just letting it become, all right, a stock itself. Right now, so let me just justify what I'm saying. For the case of ANF, right, right, it doesn't justify for me to do so, right, because if you look at the $18 puts over here, right, which is what we have, right, it doesn't really significantly create much more cash flow, right, if I did this on it. Yeah, right now, so Susan, indirectly, yes, that's what I did over here, right, for AT&T. Right, I just closed out the one that is expiring and I reopened it for the next month, right, and collecting a further credit, right, for the rollover of the expiries. Okay, all right, now let's go to our next trade over here, which is KSS. Right, so we have a $30 put option. All right, we may be able to do the same. Let's have a look. All right, KSS over here. All right, if I were to close it today, all right, let's see. I have a $30 put option. So I'll probably have to pay about 150, close to 150, right, thereabouts. But how much can I get for October then? This is good. All right, okay, because the October 30 pays us $2.90. All right, so this is a good deal over here. All right, so let's go ahead and do that for KSS as well. All right, so 145. Right, got it close at 148. Okay. All right, and the October pays us $2.90. Let's try for 290. Doesn't want to bite. There we go. I got it for 289. All right, now, so let me show you what I've done over here. All right, I paid $148 to close off the September 16 $30 put option. I bought 5 of them back. This is what I paid. Right, and then I reopened the October 21st $30 puts. I sold back the 5 and collected $289. Right, so for the net of this transaction, I actually collected $1.41. Right, $1.41. That's a good credit over here. That's actually a good roll. Yeah, okay, that's actually a good roll. EL, all right, yes, I can do that. All right, I can do that. All right, but I don't know. Maybe I'm under the weather today. I just decided to close them individually. All right, and the bid ask was a little bit wider as well, all right, for KSS. So I just decided to close them one, all right, at a time, which may make it easier for the negotiation. Yeah, all right. All right, now, so let's record it down. This is 0. And then for our KSS, position 28, there we go. $30 puts, $1.41. This is a good deal. That's $705 in cash flow. All right, we pocketed $1,000 last month, and this month it pays us another $700. I like this trade. I like it. All right, awesome. Awesome. All right, why? Let me show you. All right, we started the month, right, before today's session. Look, we started the month with only a cash flow of 329.5 for October, right? But, you know, moving 2 of our positions, right, now brings us to 1,200. It ain't that bad. And all of you probably were thinking, Terence, how are you going to nick out your $2,000 next month, right, in a market that's doing this to us right now? I just did it. I'm getting close. I like it. I'm getting close. Closer. Inching closer. All right, now. Susan, yes, you can do that. All right, now. But I would say in this perspective, all right, now, I have a goal, right, that I'm aiming to achieve when I build this portfolio. All right, now, which is $2,000 per month. All right, now, I started at $30. All right, and you know, looking at KSS, right, on a few good days, if you look at it over here, on a few good days, right, we will get that bounce, right? They can bring KSS all the way back above 30, right? It's pretty much trading in this channel if you look at it over here, right? Okay, now, so we have this channel over here and then this, right, inside a bigger channel, right? So we have a channel of 26 to 35, and we have narrower channel of about 28 to 32. Yeah, all right, now, so 30 is definitely doable. All right, so that's why, you know, I'm comfortable with continuing with the same strike. Yeah, all right. Now, so let's go to our next position over here, TSN. Right now, TSN is definitely down. All right, there's no doubt about it. All right, in fact, it's down all the way to $72. But this position doesn't expire to 21st of October. All right, so what we're going to do is we're going to recognize half the cash flow this month, right, which is $149. We did 2 contracts, so that's 1 contract cash flow value. Right, so we're going to recognize that today when the option expires. Right, and then for GOLD, right, which is a $15 put option. Let's see what's the price. It's right at 15. Right, this is a good trade so far. Right now, and it doesn't expire to next month. All right, so same deal as well. We will recognize the cash flow for $82.50 for 3 options for this month. Right, if you look at my formula, right, it is divided by 2. Right, because half of it is collected this month. Right, with the other half, right, for the month of October. Right, as you see on my PowerPoints over here. My Excel sheets over here. All right, so that's now our next position over here, and the next one, HBI. Right, so I have a HBI $9 put option. Where is HBI now? HBI is at $8.50. All right, once again, it doesn't expire to 21st October. So no actions required. We recognize the $98, which is half the total cash flow, right, for this month. All right, now last position, PFE. right? PFE. It is a winner, right? We have a $45 put option. We collected 44 cents. All right, let's go close it up today. All right, now, so 16 September, $45 put option. It will cost us about 3 cents to get it closed right now. So let's go ahead and do this. All right, it's filled. It's done. All right, and let's move forward to our next one. All right, I'm more than happy with the strike. I still feel that the company is really, really cheap. I'm happy with the same strike as well, the 42. So I'm going to go back and just reinitiate the position for another month. All right, so 3 options over here. All right, so 3 options. All right, I'm going to continue with another 3. All right, and yes, there we are. This is going to be trade 33. All right, and how much can he pay us? 16 September, we're closing this. 21st October, 45, 119. That's pretty good cash flow. Done. There we go. All right, PFE October 21st. All right, I sold 3 over here for 119. All right, so I closed the September one for 3 cents. So that gives me a net of 116. Yeah, all right, 116. So let's go ahead and record it down. 1.16, ladies and gentlemen. All right, and we're done. Right, and we are all back to a 1 month options now. All right, all expiring on the 21st of October, ladies and gentlemen. All right, and $348 in cash flow. I'm up now to one. Yeah, I like it. I'm up to $1,547, right, for the month of October. And I've got what? I've got another 6 weeks to go. Surprising. It's going to be a long month. No, 5 weeks to go. It's a 5-week option now, right, for next month. Right, I'm already at 1,005, right? So I think we're pretty good, right? And that also means that we're going to end this month, right, just under, ladies and gentlemen. Right, it's a difficult month, but we hit 1996.5. Right, how many of you would say that's good enough? That's close enough to 2,000. Right, leave a comment. Let me know. Right, or you're going to condemn me, right, just because I missed the target for $3.50. Right, do I deserve a clap or do I deserve a slap? Right, for missing the target for $3.50? Let me know. Leave a comment. Thank you. All right, thank you. All right, now how many of you will be keen, all right, to go after our target for this month? All right, how many of you will be keen, all right, to get even closer to our $2,000 target? All right, because I do have a stock lined up. All right, let's go after it. Let's gun after it. All right, today I'm going to trade OMF. All right, One Main Holdings. Why? All right, it's a profitable company yet again. Look, it's 4 PE. Right, this company is trading at 4 PE right now, and it pays a 10% dividend return. How crazy is that? All right, okay, how crazy is that? Look. Profitable. Very profitable. All right, for the last 5 years. Look at how profitable they are. Right, look at how low the PE ratio is right now. All right, this is absolutely amazing. I love it. All right, and let me see if I missed something out. No, I'm not missing anything out. I think it's pretty good. All right, let's go after it. All right, let's go after it, ladies and gentlemen. All right, now, so 21st October, it's at 34.81. Oh man, the stock is dirt cheap. Yep, the stock is dirt cheap right now. All right, so I think I'll be happy to go with a 35 strike. All right, because 30 is way too far and it pays too little. All right, so we'll go with a 35 over here. Let's see if we can nab a 35. Okay, I'm going to take a 3 option contract on this one, okay? Let's go after it. It's not going to give it to me. Oh, well, I'll just nab it. Nab it. All right. Okay, I got it done at 175. I'm just taking it. All right, now, so I sold this OMF October 21st, $35 puts. I sold 3 over here and got it done for 175. All right, 175. All right, let's go. All right, let's record it down. All right, trade 34, ladies and gentlemen. OMF. What strike did we do over here? 35. In September, 1.75. All right, for 3 options, that's paying us. Oh, whoa, 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 ladies and gentlemen. Look, looky, look, looky, look. Looky, look. What have I done? Are we there yet? Can you leave a comment? Are we there yet for October, ladies and gentlemen? Tom, let me just pick up your questions before the comments come in, okay? All right, for the rest, all right, please leave a comment and tell me, are we done yet? All right, are we there yet? Sorry. All right, now, so Tom, all right, yes, if you've joined me in one of my coaching sessions before the regular Fridays, all right, this is a portfolio portfolio, which means it comes with a long-term objective in mind, all right? Now, it also requires a much bigger capital as a base, right? So this account that we build over here is based on $100,000, right? We started it since the month of May, all right? And over the last 1, 2, 3, 4, 5 months now, which are completed, right? We have brought the accounts, all right? Let's go, right? To a total of how much now? Oh, yes, it's done. Right, we brought the account up, all right, to a total of $111,980. Right now, that actually represents, right? That actually represents how much is it? Oh no, that's not right. That represents 12% return in 5 months. All right, now, ladies and gentlemen, how many of you are happy? All right, if you can make 12% in 5 months, spending less than 30 minutes a week. All right, thank you, Mike. All right, I just saw your comment over here. Thank you very much, Mike. Yes, I don't account for any dividends we've collected. EL, all right, you're always the one that worries a little bit too much. All right, number one, let me remind you once again, all right, it is always about the stocks that you're playing with. All right, it is always about the stocks. All right, now we have built this portfolio not just for the last 5 months, but even way before that with our predecessor. All right, now we have stocks, all right, where we will assign all the time. Right, and it sometimes takes 1 month, it sometimes takes 3 months, it sometimes takes 5 months. That's perfectly fine. Because while holding on to all those stocks, if we continue to achieve our objectives, right? And that's really fine too, right? So like you said over here, right? We do have some stocks holdings. Look, one, two, three, four. All right, okay, four. Okay, let me show you. We have 4 stocks that are assigned to us right now. But looky look, have we hit our goals? We have hit our goals, yeah. All right, so does it jeopardize? All right, it holds me back. All right, but it doesn't jeopardize or stops me, right, from going after my target. Why am I saying this? Let me show you. Right, because for these 4 stocks, if you look at my calculations, they are all allocated 100%, which means the full cost, right? The full cost, right, for owning those stocks, okay? The full cost of owning those stocks, right? And then, right now, for the rest of my put option positions, okay? Now, if you look at it, they're all based on 70%, which is our rule, right? Now, what's my total exposure right now? $117,000, right now. So how much is my account funded? Can all of you tell me? 111, all right, 111. So in technical terms, have I overdrafted on my accounts? All right, what would all of you say? Have I overdrafted on my accounts? Doesn't matter, y'all. Doesn't matter. Isn't that what stock is about? All right. And the first key is this. All right. Are we buying low and selling high? All right. Now I'm telling you this because I've been building this portfolio the way I've done it right now for over a decade. Yeah. Okay. It really doesn't matter. We have market crashes, but it's always about making sure that when you get in on the trade, right, the stock is already cheap. Am I doing this on Microsoft? I'm not. Am I doing this on Apple? I'm not. Why? Because, like you said, if the market continues to crash, these stocks like Microsoft, Apple, and Google, they still have a long way to go down, right? But not stocks like Intel. It's already at 5 PE. How much lower do you want it to go? All right, it's WBA, it's at 5 PE. How much lower do you really want it to go? All right, so yes, we may have another maybe $2, $3 downside, right? But we are very much near the end with these kind of stocks. Right now, there's no point of really trying to convince you or argue you, right? Because time can tell. All right, that's all I would say to you. All right, okay, stick around for longer, right? And you see what I mean over here, right? Because I played this many hands over, right? It's always boiling down to the stock itself, right? If you build a portfolio around high valuation stocks, doing what I did, then yes, your risk that you're pointing out is very evident, is very real. Right? But on the flip side, I do want to show you, and I did this before, even if I'm assigned, look, right? This is the portfolio right now. Okay, so the portfolio requires $117,000 to fully capitalize for all the positions, right? But if I were assigned all the stocks, right? If I take assignment on all the stocks, right? The cash requirement on my account is $139,000, right? It's $139,000. Right? And can all of you tell me first, right? If my account now is worth $111,000, okay, $111,000 in cash, right? When it comes to stocks, okay, how much capital do I have, right? That is given by the broker on margin to buy and hold stocks? Can all of you type it in the comments over here? What's the total amount of capital that I would have to buy? To buy stocks, right, with $111,000 cash account? This is a very, very important point, okay? I do want to use this as a learning point of it. Because when markets are going down, many of you start to worry a lot, and you tend to over worry, right? And with all these worries over here, right? Okay, now you must remember, right? Okay, buy when others are fearful, all right? And because we have all these fears, right, it allows for more experienced people like us who knows what we're doing to capitalize on your fear and go out there and make these kind of money that I'm showing you over here, right? Okay. Doesn't matter, EL. Doesn't matter. I'm trying to show you right now with my calculation, right? So please answer me over here, all right? Desmond, good. Right now, so if I want to do this and I multiply it by 2, right now, so that means, right, that in theory, the broker is going to hand me up to $220,000 to use to acquire stocks. Okay, will you all agree? All right, now, and even if I'm assigned, okay, here, look, I'm assuming that I'm assigned on all my options. They all become stocks, right? What's my total requirement, right, to buy and hold all these stocks, right? To buy and hold all these stocks, what's my total requirement? 130, let's just make it 140,000, right? I'm given 220,000 by the broker, right? Okay, and even after having to buy all of the stocks, yeah, okay, every single one of them, right? I need a total of 140,000. Am I still well capitalized? All right, do I still have a lot of margin or room for safety? Right, just type a yes or no, right, in terms of what I'm saying over here. Thank you very much, Go. Right, and that's what I'm trying to talk about over here, ladies and gentlemen. Right, it's not about what you don't know, but it's about what you know and how you plan for it. Right, and look, these are full amounts. These are not the margin amounts. These are not 50% amount. These are full amounts, which means, all right, EL, you must understand, right? I bought the stock at $45. I've already allocated the total amount. So the erosion of the price doesn't affect me any further. All right, can you see what I'm trying to show you? It doesn't affect me any further, right? Because I allocated the full $22,500, right, to take up this stock position. And so goes for the rest of my stocks over here, right? And the total comes to 140,000, right? And I'm given up to 223,000 by the broker. I'm still well capitalized, right? Okay, that's why that's why I'm doing this, or I'm continuing to do this without any fears at all. All right, okay, you only run into trouble, right, if you put yourself at risk, right, of running out of money, and that's called margin call. The only thing that you can do to wreck your account with this strategy, with this approach, is to pick and do it on the wrong kind of stocks, right, and to overtrade, right, and putting yourself at a margin call risk. Those are the two biggest nemesis over here, right? Okay, and those are the two things that we don't really practice, all right? Or I don't go anywhere close to that. Yeah, all right, now. All right, thank you very much, Sham. All right, so Sham is just saying, I completely agree. I see this almost for a decade, right? From 2013, right, to get a returns, and it works. Right now, it may be a concern for the short term, for 1 to 2 months. Yes, it is, because that's just the market. Market is inefficient in short periods, but in the long term, it is always going to achieve its efficiency. Right now, is this the first time, right, that you're going to see Intel fall to these kind of low levels? No. But have Intel always bounced back up? The answer is yes. What are the conditions? It must still remain a company that's capable of generating profits. Right? So, EL, like I said again, we can continue trying to convince you or argue this home. Right? But I think the best answer to you right now is just to continue and see together with me and the rest of the participants over here how all these trades are going to unfold, right, over the next 1, 2, or 3 months. Because look, all right, I promise you I'm going to build this portfolio for the next entire year, right? And now we're going into what? Month 1, 2, 3, 4, 5, 6. Month 6. We're halfway there. Right? And have I missed out on any month's target over here? No. Why? Because for 5 months, right? If you work it out, completed 5 months, right? My target should be $10,000, but we're hitting close to 12,000. So we are literally 2,000 above our total goal, all right, for 5 months, all right? I've got room, yeah? So you must understand as well, what are all these room for? In certain months, let's say if I'm stuck with stocks and I can't reach my goal, right? All these excess cash flow can come back and write me out. Because at the end of the day, right, for 1 year, what's my total amount? 24,000. As long as I can achieve 24,000 in a year, right, that's good enough. It doesn't matter how I get there, but by the end of the year, as long as my account makes me $24,000, that's my goal. I'm happy. All right, okay, 1 or 2 months I fall short, that's perfectly fine. Yeah, all right, as long as I get there. All right, now, ladies and gentlemen, all right, that's all for tonight over here. So right now, we're probably holding one of our worst situation ever. We are assigned on 4 stocks. Oh my God, my world is going to crash. 4 stocks, ladies and gentlemen. Oh, well, it's just another day. It's just another week in the market. Oh, well. All right, we can't bend Mr. Market. Mr. Market will do what he wants to do, right? But our job is to protect ourselves, right? And that's the very key you must understand. That's the very key I teach all my students over here, right? The first thing you must do is to protect yourself, right? And once you have done that job, right, let Mr. Market do the rest, right? Because as long as your rationale works out, right, if your reason behind each and every trade that you take is already well thought of, is already working out before you even open up the trade, then just follow through it. All right, ladies and gentlemen. All right, please remember, do me a favor, hit the like button, hit the share button one last time, all right, before I end the Facebook Live this week. All right, and this marks the end of our 5th month together. All right, okay, we're starting to build for the 6 monthly option expiry for the month of October. All right, come back next Friday and see what new positions I'm going to add into my accounts, or maybe the market will turn around for us and what positions we can close up. But one thing I take away today, and I'm really happy, I can tell you this right now, I'm really happy and relieved. Why? Because for the rest of the month, even if I don't do any more things, my goal is hit. Looky look, I've hit my goal. Now I can let Mr. Market go do what he wants to do, and I've already achieved my target. And I've already even made up the 350 shortfall. Yes! I'm just kidding. All right, now, so ladies and gentlemen, all right, I hope you enjoyed the session as much as I did, and I hope you took away and learned something new today as well. All right, and please, 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 don't stinge on those like buttons. Don't be stingy on those like buttons. Yeah, all right, now, so thank you very much. Have a great weekend, ladies and gentlemen, and I'll see all of you next Friday, okay? Bye-bye for now. All right, see you again.